Okay. We are gonna get into the trade breakdown of this USD CAD trade I took yesterday, the 14th of April. I meant to make a video on this yesterday, but I didn't. I couldn't. I ended up not being able to make one, so we'll just have a quick little breakdown of this trade and my thoughts on why I took it, right? So we just have to back check this a little bit. Pain of using TradingView free mode, boys. You can't rewind. But it is what it is. This was the swing high at the time. It had the breakout structure here. And then we would have had the internal break over here. We would have had the internal break over here. So coming into here, we would have had the internal break of structure here, which means internal would have been bullish at this point, right? And then we would have had the swing be bearish. But following the bearish swing is higher probability than following the bullish internal, right? Because swing structure is always stronger than the internal structure. So my thoughts was, okay, we would come into the extreme, right? I'm looking for sells, right? Even in here, within here, this was 12 a.m. yesterday, right? We come into here, but it's not as high probability as like the extreme zone, right? So coming into here, I'm monitoring this, and then I don't get a valid setup to take the sells, because I would at least want to see a change of character, which would be like the first sign that maybe there's a little bit of bearish a little bit of a bearish shift, right? We did not get that. So okay, this goes past, and then we go up. We have the slight movement down here, and then we come into this extreme M15-minute zone, right? We come into this. I set my alert down here for the change of character, like the first sign that a little bit of bearish momentum may start coming in. So we have this tiny change of character, which is something I did look into today, right? I just went back, did a little tally of my old trades, and with this type of 15-minute chart, where yes, it's a valid chart, it is the first sign of like the bullish momentum, because this zone does fail, right? When you do have a zone failing like this one, you start to think, okay, maybe the bullish plays are less likely and more of the bearish plays are likely, right? Okay, I see that, and then I am ready to enter on this zone here, because it would have been the flip zone. We have this come into here, react up, and then we have the chart, which means this would have been a flip zone. Okay, now I went back, looked at some of my older trades, and the tally is 4 of this type of change of character. 4 of them are losses, and only 1 win has resulted from a trade of this manner, where you are pro swing but counter internal, but also your change of character is only a slight one, like this, way you have like this little wick just sweeping this and coming back in, right? So looking at the stats, I'd probably say, okay, maybe going forward I should probably avoid these kind of trades where you have this tiny chalk coming back in, and then just avoid those kind of trades. I think it would be a little bit more simple for me to just avoid them, because even if I were to say switch to the 5 minute entry, you'd end up getting a valid entry into here, but then the change of character wouldn't have been as convincing on the M15, which is my medium time frame. This is the time frame I go to for like my direction of the trade, and then if ever I go to the M5 minute, it's only for entries depending on the entry type I'm comfortable with at the time. Where it's close price action like this, I am willing to take like the 60% of the zone and then just trade that down, right? So moving forward, I'm going to try and just avoid the small tiny change of characters coming into here. Just avoid those trades and then see how the baseline changes. Maybe have a few months, let's say 2 maybe 3, of avoiding these. But what I will do is I'll still monitor them. Okay, this is what happened. Okay, how did it work out? And then just keep a tally on the side somewhere, that if ever, let's say over 20 trades, this type of trade like setup is profitable over, let's say, 20 trades, then consider bringing it back in. But because right now we are like pretty much live trading, and you don't want to have like too many like tests basically, or experiments. So you just want to keep the experiments to a minimum, just stick to the much safer trades, which this is not a part of. What we do want to see is a change of character where you have this bearish candle close below, showing that its intention is to move lower, right, and then come back in. So another thing I was looking at is, okay, you have this zone, it was mitigated, but it was a tiny mitigation as well right here. When this comes back, this is a strong liquidation because it's liquidating a high that managed to create a low, even though it's like not the strongest of lows, but nonetheless it managed to create a low. And then this was a little bit more higher probability, where you have the strong liquidation into here, and also you would have a decent amount of R to target before the swing low. But in hindsight, I'm not sure how well it would have played out. I think at best here you would have gotten a break-even trade at best, with the way I like to enter into the trades. I believe at best you would have gotten a break even, and not the loss that I took in here. So okay, I'm offline, no Wi-Fi. Yeah, okay. Anyway, this is just a trade recap. I think I'll have these for every single trade I take moving forward. Just then I can look back at them, let's say maybe a month, and just look at the trades. What do I want to change? Do I need to change anything of that sort? So yeah, have a chill one, guys. We will have more of these as time goes. So yeah, that's it. Thanks.